All right, well, the Supreme Court has ruled 6-3 on Donald Trump's sweeping tariff powers, and that ruling brings us to one core question tonight. For years, Donald Trump defended tariffs as a wealth generator for America. Well, that is the claim. Trillions of dollars, new investment. Well, we'll talk about that. Hello and welcome. You're watching Deep Dive. My name is Vineet Malhotra, and tonight we're asking the question Donald Trump himself has raised again and again. Did tariffs make America rich? We focus on the financial record, how much revenue actually came into the United States during the tariff years, what changed after 2018, and what do the official numbers tell us? Let's begin with where things stood before the trade war. Well, before 2018, tariff collections in the United States were relatively stable. For many years, the federal government collected between $30 and $35 billion annually in custom duties. That was the normal range, steady, predictable, and modest compared to total federal revenue. Then in 2018, U.S. trade policy shifted dramatically. The Trump administration imposed sweeping tariffs on hundreds of billions of dollars worth of imported goods. China was the primary target, but tariffs also extended to Mexico, Canada, the European Union, and other trading partners. The financial impact was immediate. Annual tariff collections more than doubled. Revenue jumped from roughly $35 billion to over $70 billion annually. As additional rounds of tariffs were introduced and maintained, collections remained elevated. The upward trend continued over the following years compared to the pre-2018 baseline. By 2025, customs duties reached approximately $264 billion in a single fiscal year, one of the highest levels of tariff revenue in modern U.S. history. When we look at cumulative collections from 2018 through 2025, tariff revenue adds up to well over $300 billion. That represents multiple years of expanded tariff enforcement. Now let's examine where that revenue came from. China accounted for the largest share of tariff collections because the scale of imports, electronics, machinery, industrial components, and consumer goods tariffs on Chinese products generated the biggest portion of total revenue. Mexico contributed a smaller but still meaningful share, particularly through tariffs on steel, aluminum, and manufactured goods tied to North American trade flows. Canada also accounted for a portion of collections, especially in metals and industrial inputs affected during the tariff period. India's share was smaller compared to China, but collections increased as tariff coverage expanded to chemicals, textiles, engineering goods, and auto components. While India was not the central focus of the trade war strategy, tariff revenue from Indian imports did rise during this period. Another important measure is the effective tariff rate. By the mid-2020s, the overall average tariff rate applied to imports had reached levels not seen in decades, reflecting how broad and extensive the tariff measures had become. So the financial structure in simple terms is this. Before 2018, annual tariff revenue stood at roughly $30 to $35 billion, and after the trade measures were introduced, collections moved above $70 billion annually. As policy expanded, yearly revenue climbed further. By 2025, customs duties reached around $264 billion in a single year, and cumulatively between 2018 and 2025, collections exceeded $300 billion. However, revenue alone does not tell the full economic story. Tariffs are paid by importers, typically American companies, which can pass costs to consumers. Some domestic industries benefited from protection, while others faced higher input costs. Trade patterns shifted, supply chains adjusted. Now, the Supreme Court's 6-3 ruling changes the legal authority behind some of these sweeping tariff measures. It places limits on how executive power may be used in future trade actions. But from a financial perspective, one pattern stands out clearly. Revenue from custom duties rose sharply after 2018. It reached record levels compared to previous decades, and it became a more visible component of federal collections during those years. The legal framework may now evolve. Trade policy may shift again, but the numbers from the tariff years remain part of the official record. Tariffs increased collections, they altered trade patterns, and they left a measurable financial impact on the United States economy. Well, let's talk about this. Joining us on the program is Mithali Nikore, economist. Mithali, appreciate you taking out the time and staying here with us. Well, what do you make of this rollback by the Supreme Court? Of course, everybody knew that whatever Donald Trump was doing was unconstitutional, but this also brings us or takes us back to the drawing board. Billions and billions of dollars have already been paid in tariffs. Are the Americans going to refund that? Because a lot of this tariff has been passed on to the end consumer in the United States as well. What kind of a potpourri are we looking at?
Thanks a lot for having me on the show. And honestly, this is a nightmare. This is going to unleash chaos and mayhem in the world of global trade. And if anybody says otherwise, they're not understanding the legal quagmire that
what does it
this
do to the
one
stock market?
particular
I'm interested
judgment.
to know. What will it do to the stock market? It's already suffering.
Yeah, it will suffer, Vineet. I mean, to be very honest, I really don't know how much and how deep the suffering is going to be, but it will suffer for at least 1 week, and then maybe in a week when we have more clarity on the framework around how are things going to proceed. Then I think the stock market will recover. But at this point in time, definitely there will be some short-term suffering, and then the recovery will happen. But very honestly, the basic issues are here. The first thing is we don't know what is the actual tariff rate that is being applied. That's the first thing. The second thing is this 10%, whether it will be permitted or not permitted, by the Supreme Court or by the Congress, we don't know about, this additional duty that has been applied. The third thing is we don't know who to deal with in the US, because you have the Supreme Court saying one thing, the government in power and the president saying another thing, and then the opposition coming in and saying a third thing. So we're completely confused, as the rest of the world is completely confused on what is the US position today on this, on this topic. And very honestly, I expect a lot of lawsuits to come in from exporters, from transnational exporters, from international organizations asking for refunds, and nobody has said anything in this judgment on refunds.
Mithali, what does this tell us? Has this been a case of overreach by an American president who perhaps does not or did not understand the economics of these tariffs? Because obviously, if a country is being allowed to charge so many tariffs for so many decades, there has to be a credible reason behind it. It doesn't mean that India or China, and for that matter, any other country, were out there to fleece or dupe the Americans.
Absolutely. And now, if you think about it, there was definitely no grounds. And if you remember, we were on your show just about a year ago in April 2025 when these ill-calculated tariffs were released in that, very memorable school or college-like, board that the president brought out in front of the press of the world, and showed these calculations which were absolutely flawed, and, propounded that the whole world should now come in and should, follow these tariffs. I mean, very honestly, even at that time, we knew there was no economic emergency, right? The act which was used at that time to justify the tariffs was the Economic Emergency Act, but there was no
Mithali,
economic emergency. The American
is this
economy
going to
was doing
have an
well.
impact on the American economy?
Most definitely. It is incontrovertible that it will have an impact on the American economy in three ways. The first is, if as a country I'm planning to invest in the US, because I have now negotiated a trade deal which requires me to invest in the US, I may hold back on those investments now because I don't need that trade deal anymore. The tariffs themselves are illegal. The 10% tariff is minimal. The second is that if I'm an American company and I'm trying to import something, or if I'm trying to drum up consumer sentiment, it's at an all-time low. Consumers don't know what is going to happen to the prices of everyday goods. And the third issue is the entire cycle around the US dollar. This also shakes the faith of investors in the US dollar and then makes the entire economy shaky because of the fact that you simply don't know of the uncertainty that's going to come in. So overall, it is going to create a very poor impact on the US economy in terms of consumer confidence, investor confidence, currency confidence.
Mithali, appreciate you joining us. Thank you so much for your time. We take a short break now. Be right back.